What's up, traders, and welcome back to a market breakdown. As always, we are going to be going over gold, and because this is going to be the first breakdown of the year, we're just going to mention a few of the important events that happened last year that really pushed price towards the upside on gold, and then we'll do some top-down analysis so that way we can prepare from a technical perspective for the upcoming sessions. We're not going to make this video too long. We're not really going to talk about NFP. This is more of a video to kind of refresh our minds, see the hindsight picture of how strong of an impact fundamentals may have on the market. And again, just so we can be a lot more clear going into this new year. So, hopefully all of you guys had amazing holidays, spent time with the family and loved ones, but now it's back to work. And so let's get right into this. So when we can look at gold here from from really just objectively looking at gold, we can see that around this time, which was January of 2024, just looking at the market, price of gold really just went towards the upside. You can see very, very clearly, obviously, very strong pushes towards the upside. We had some higher time frame consolidation periods and maybe like some pullbacks, but overall gold, that market structure throughout the whole entire year was very, very strong, right? So when we see the fundamental reasonings as to why gold remains so strong, we have to take into consideration the fact that for majority of 2024, the main focus was on the Federal Reserve and their approach with the rate cuts. How many rate cuts are they going to do? Are they going to be aggressive? Are they not going to be aggressive? So a lot of that information right there, as you can clearly see, the price action on gold, the way it was pricing it in, was clearly more towards the upside, right? So we have to be understanding of these events, because as you can see, literally from January, like you can't make this up, from January all the way pretty much until October. This is around like the beginning of November. We really just had very, very strong moves towards the upside. So again, we had rate cuts being the reason for gold to remain, to have that demand. And then we also throughout the year, not every single month, but some months of 2024, we had some geopolitical tensions coming in, whether it was Russia with Ukraine or whether it was the Israel versus Hamas war. Again, all of these things right here, rate cuts, geopolitical tensions, these are things that are going to keep that demand strong in a pair like gold, right? So again, when we zoom in, we see that very clearly, strong bullish price action on gold. And when we see, for example, as price of gold pretty much made all-time highs around 2,800, you can see, let me just delete this really quickly. As price peaked and we were heading into the beginning of November, I'm sure some of you are going to remember, that's around the time where Trump was elected the US president, and that brought a lot of demand back inside of the dollar. So you can see here, more or less around the beginning of November. We're not gonna get too technical and dive in and like look at this specific date, but more or less, again, like on this daily time frame, you can see the beginning of November, price of gold finally started to have these large pullbacks against this very strong bullish market structure here. So around, again, you can see this here, the beginning of November. If you go and take a look at the daily time frame on dollar, beginning of November, more or less around this time, again, when Trump was elected president, that's when you start to see that upside on dollar, and gold started to have these large pullbacks, right? So with that being said, a lot of the information about rate cuts, geopolitical tensions, especially right now that we don't really have any sort of new escalations going on, and with the Fed, as some of you may remember, in December, they sort of changed their tone a little bit and they weren't so dovish. They were actually saying like, look, going into 2025, we're not planning to do 4 rate cuts. We're most likely going to do 2 rate cuts. So just from a fundamental perspective, if we understand that on one side, gold is very, very strong, just based off the fact that the markets were expecting the Fed to do those rate cuts. Now that information has been priced in, that time has passed. We are sort of, as you can see from a technical perspective, starting to enter kind of like doing these pullbacks here and then sort of ranging, right? So the fact that price hasn't been able to really continue to push towards the upside is telling me as a trader that the rate cuts or the geopolitical tensions aren't having an impact on price of gold at the moment. Obviously, anything can change and anything can happen in these markets. But once we start zooming in, and now we can dive sort of into that top-down analysis part, because we basically understand, okay, we had rate cuts, geopolitical tensions, price of gold is very, very strong up until November. Then that Trump trade started to come into the market, dollar got strong, gold started to finally sell off from the all-time highs. Now we can see things a little bit more clear. Now we understand that, okay, so at the moment going into 2025, rather than just being blinded by the fact that the Fed may be doing more rate cuts and geopolitical tensions have passed, we don't need to be worried about those things right now. We can adjust and we can adapt to the current price action, which again, in my opinion, on these higher time frames, like looking at the daily time frame, we are, in my opinion, sort of ranging, but kind of starting to turn more bearish, again, because of the fact that price really isn't starting to trend towards the upside. We can see areas of resistance, like for example, around here, right? We have those areas right here with price failing to really trade above that multiple times. So you can see here, like for example, again, very, very strong sell-off. We had that break of that bullish market structure. Then price ended up doing very large pullbacks, but again, it failed to really get towards the upside. So again, this market structure right here is still following, right? So let's go ahead and actually dive into the market here, and let's start marking off a few zones here. So we do have an area of support just around here. We're obviously going to zoom into the 4-hour and the 1-hour to get a much closer look. So we have an area of support there on the daily time frame. We do have our resistance over here as well on the daily time frame. And then once we start to zoom in, let me get onto the 4-hour. We can see, for example, like kind of where price is trading right now. We had these previous support, previous resistance. So we do know that this is a key area for us to take a watch out for. I'm gonna leave this just around here for now. I'm gonna adjust this a little bit higher, and then we can dive into the 1-hour time frame. Excuse me. And then really, again, just kind of adjust this, make it look nice and pretty right over here, so that way we don't have a messy chart. Again, we want to be precise about the levels that we're trading in. And then really we can mark off over here. We do have an area around the 26, 23s around here. And then I'm going to mark off this as not so much of a significant area, but more of an area to watch for in case price is going to trade back below this area here. So again, going based off the information that I just said, that majority of the rate cut information, it's already priced in. We don't really have too many geopolitical tensions going on at the moment, and we still have a pretty strong dollar, right? Without having to even mark up dollar, we can clearly see, again, very, very strong dollar is still showing strong signs of demand being inside of dollars. So for me personally, I am going to continue adapting to that. I'm going to adjust to really continue following gold sells, especially once we can trade below these 26.37s. If price is going to fail to trade below these lows, then what I would really watch for is price getting above these 26.43s. Above here, we can easily adapt to some pullbacks. Watch for price and wait to see if price can get up back into these 26.64s area, more or less, where we can really look to continue selling gold, right? Thank you guys for watching that short video. Now I realize I haven't really introduced myself to many of you. So for those of you that don't know who I am, my name is Tarzan Trades, and I am a day trader as well as a market analyst. And this is something that I've been doing for quite a long time now. Now, for those of you that don't know what I do, I pretty much have my own community of traders where the goal of this community is to really build more awareness within the markets, because I realize that inside of the trading space, there's just a lot of noise about price action, fundamentals, ICT. There's just a lot of things online that's just constantly thrown in people's faces, and I feel like people don't really know exactly how to approach the markets. Now that you found my channel, or whether you've been here before, you guys know that I remain super consistent with trading the fundamentals, looking into the price action, and I really don't steer away from those concepts. Now, a lot of you don't really know me because I haven't really put myself out there in the internet, but you're definitely gonna hear a lot more from me. So make sure you guys stay tuned with all of the YouTube videos that I'm gonna be posting. I'm gonna be talking about fundamentals, I'm gonna be talking about technicals, I'm gonna make sure I stay consistent with all market breakdowns, talking about NFPs, CPIs, FOMC, pretty much breaking down everything. We do not shy away from any challenge that the market may throw at us. So again, if you're not familiar with what we do, make sure you do stay tuned, as you will see me around. Take care.